All right, folks, here we have the synthetic indices crash 300 index on a 4 hour time frame. And today, I'll be teaching you how you can be able to catch spikes or crash with just one simple indicator. Now, the indicator, I have it on my screen here. You can see it there. That's the RSI. Now, what the RSI usually do is to tell you overbought and oversold zone. So once the market reach a level like this indicator right here is going to do what? Going to tell you that the market is being oversold or overbought. Then you can out. Only then you can out. And when you are outing now, you need to be able to understand what are the signs that indicates a reversal in trend, because this is all what you need. Now, first of all, let's go into the settings, and from there, yeah, that's it. You can see there the period 5. Simple. Now, you want to catch every move. That's one thing about a setup like this. You want to be able to identify every single move as they are happening. You need to be able to tell that this is this. Now, you need to avoid one of the mistake you need to avoid is trying to sell when price have not give you the right signal. Now, what is the right signal? The right signal is using your 4 hour time frame to tell where the market at. So, like in a situation like this, you can see that this is a series of bullish trend, and you can see the RSI from here. You take just the low if the market is going upward, and you take just the high if the market is coming downward. Now, you have it here, and you can see it here. And so when the market gets to this overbought area, you see that the market was still making new high, but you don't need to force the trade. That's one thing. You don't need to force it. What you need to do is to wait for price to actually show you an impulse move like this to the downside. Then, only then, you know that, okay, they are shorting the market now. They are in sell mode. Now, you look your what? Your indicator for confirmation. Now, your indicator have this relative equal high here. You can see it. But this is higher than this. Now, as soon as the market drop below this level, now a lot of you will think that it's a buy opportunity. No, the market will trade now in the candlestick now. This move here, this move you are seeing here, will start appearing on the candlestick. Now, once this is happening, you will be seeing the market trading below the oversold zone. And these are your trigger to sell the candlesticks. Now, what you need to do now is to switch from this higher time frame now to a lower one. Go back to that place I used. Now, you can see how the market is trading inside the oversold area and just getting started in the candlestick. So now you get the idea that every green structure or strength will take you into 50% of your RSI, and you short it from there. You can use this eye as your stop, or you can use this very candle as your stop. Now, once you take your shot within this area, you are watching this. You are not looking to buy with this because the market have not done the right thing to actually show you that they are buying now. You only close your position when you find your RSI in the higher time frame, in like your 4 hours time frame. When you find a move like this, that is when you close your trade. You see again, this this here, this particular low is lower than this here. That is your signal to say no, let's go up. What? Your short. Now, what did the candle do here? The candle creates a series of eye and broke this eye before falling downward. Now you look again. This guy is no longer trading too much inside the oversold zone to show you that there are strong buying power in the market. From there, what do you have? A series of bullish candles